What's up, my friends? What an amazing day. I was able to lock in over $4,000 in a brand new Apex account. Yes, today I decided to trade with Apex because they've got an 80% sale on and they have a one-day pass rule until the end of the week. So I thought, why not grab another $150,000 account and get it passed? So I'm almost halfway there after just one trading session. And some guys in my room did exactly the same thing and they started to bank some big profits. So what were we looking for today? Well, yesterday we talked about it, didn't we? We wanted that pop and grind kind of trade because we knew shorts were trapped towards the high, all right? And unfortunately, we got that trade, but it happened in the London and Asia session. So we had to be cautious, we had to be patient, and we had to wait for the pullback. So let's jump over now into the charts and I'll explain what I saw. So from the very open, we can see yesterday we had this golden zone here. This is yesterday's close, all right? I'm going to zoom in on this chart right now so you can see it. This was the close from yesterday. So we knew we had gapped up overnight because the open was all the way over, where are we? Over here. All right, that is a huge gap, an absolutely massive gap. I'm going to mark this out for you so you can see it. This was your 9:30 opening range, and the pre-market high was pretty much in the same region. All right, so you had to be very aware of this because there was a high chance that anyone who was swing long was going to start to take profits into the open, and that's what you got. You got this double top kind of scenario here, some good profit taking and a washout. Okay, we got that washout and this washout right here that did not fill the gap, but what it did do was fill 50% of it. So if you had used a fib, you would have understood that we came right into a potential buying area, which is why buyers started stepping up, because we washed the London low and we started to trend up and use the liquidity. So what was the liquidity that we used? We probably saw, I've just deleted part of it there so I can explain it to you where I was teaching my room. This is an inverse head and shoulders, all right? Head, left shoulder, right shoulder. So once we swept, this was a big manipulation leg where it was trying to induce shorts looking for the gap fill, but we were still bullish, all right? The overall trend was bullish, and we created and came into what was a demand block. H1 was all the way down here. It was a big blue block. So once we started grabbing the liquidity here, there was a good chance to move higher, and that's exactly what happened. Now, if you were watching the other indexes which I teach, you would have known the VIX was near all-time lows, all right? We are now under 13, trending down as low as under 12.5 today. Incredibly low. You cannot be looking for a short on the market when we are down there. That is how you will get trapped. And the same for the Dixie, okay? The Dixie had rolled over. We talked yesterday in yesterday's video about that potential head and shoulder move on the Dixie. Let's zoom in on this so you can see it. Now, yesterday I was saying I would love this head and shoulder setup on the Dixie, which will allow us to get the breakout. Now, it did it overnight. There's the left shoulder, there's the head, there's the right shoulder. So when we opened up this morning, all right, we'd already broken the neckline and we'd already swept this liquidity. So you had to be cautious, all right? We were either going to trend down or we were going to snap back inside, which is what we got. And now you can see it started to print an inverse head and shoulder and start to move up. So once we put in this low and we started to move up, you had to be cautious, okay? Very, very cautious, because this means the market is getting ready to roll over. So coming back out of this now, and we can get back into the ES, which I will zoom back into. All right, We came up, we swept the pre-market and the opening range high, okay, right up here, and then we started to trend down. Now, we had a block down here, which I was very aware of, and I will tell you now, I was getting short into this intraday supply, looking for a wash just into the H1 demand, right? I wasn't looking for too much more unless it was really willing to show me. So I was attacking this short, and I was attacking here short. In fact, I can show you my execution so that you can see them. Right here. All right, so I was attacking this short, covering the washes, attacking back into the same area, looking for lower prices, but we didn't get lower prices. So what did I do? I flipped long. All right, the moment I saw this starting to play out, all right, I knew shorts who were not smart enough to be covering into that wash were going to get trapped, and the higher time frame still said higher. So I was getting long in here, and I was adding in the flow zones, and I was adding in these imbalances right in here. Okay, this was an imbalance, looking for that push up to take out this high of day where all the resting liquidity was sat. So I took some partials off in this small intermediate high right here because we were coming into lunch. I didn't add up here because I didn't want to add too high. I was very aware that this could be the manipulation leg, which it was. I covered into this wash above the high where the liquidity was into the top of the channel, and crucially, which I pointed out in the room before it happened, which I'll post in here so you can see, I wanted to be out of this trade before a new H1 candle. Now I'm going to show you why, so you start to understand the importance of Malaysian SNR and the importance of understanding higher time frames. So if I go to the hourly chart now, when we had this new hourly bar open, I knew that this right here was going to be resistance, all right? This was going to be our hourly resistance, and we were right at it. So I was selling into that resistance. And the next level of support was all the way down here. What is now a red block was at the time a blue block, all right? It was a blue block for demand. So back into the lower time frame, you will see I sold up here into this level and we washed hard. And why did we wash hard? We had this retail liquidity trend, all right? All the stops were just resting under here. So there was a good chance that they were going to get slammed, and it's exactly what happened. So they got slammed down. We came down to VWAP. We tapped what would have been H1 demand. Remember, at the time, this was a blue block for me. And then we bounced right off it into this imbalance. And I'm going to point out again, not only was it an imbalance, it was a lovely fib retracement into the 50%. Now you'll notice this red line I've done. This is my anchored VWAP from the sell at the high. So we came into the anchored VWAP where the sellers were. My flow zones had also crossed. Okay, this was a perfect short. I wasn't around for this, but this was a perfect short. Retest of the channel, retest of supply, 50% bounce. Flow zones were saying short, anchored VWAP was saying short. What more could you want? Easy short, and I'll show you how great this would have been if you managed to take it, all right? Very limited risk above the wick, and you would have been able to target the low of day because it was a highly probable move all the way back down to here, giving you over 10R, all right? Absolutely beautiful move. I did get short afterwards when I came back to my computer and I saw that we were failing. We had this imbalance here. I got short in here and I was trying to cover down here, and I actually fat fingered out, unfortunately, while I still get used to trading view. But this was the drawn liquidity for me, all right? It was the IB low and it was the morning low. So it's a good chance we're going to come down there and then into the next H1 block. And when we fail this, we're going to fill that gap, all right? So very, very probable trade, very probable. So moving into tomorrow, what can we now expect? Well, we have had a huge move on the Wednesday, all right? When we think about the weekly model, I talk about Monday, Tuesday setting at least one extreme for the week. So on Wednesday, we are either looking for a breakout or a failed breakout. Now, a lot now is going to depend where we close, because there's still 15 minutes left of this market. Where do we close and where do we gap tomorrow? we are well into earnings season, all right? So there's some big earnings coming up over the next few days. So it's going to make a big difference, especially for the NQ. Lots of tech earnings, which are heavily weighted on NQ. So we have to watch for that. So far, this is starting to look like a failed breakout, isn't it? This is very much starting to look like a failed breakout. If I go down to a 10-minute chart, okay, this is without a doubt looking a little heavy, but technically, as long as it holds this level, it still has a chance of sustaining. But we have so much liquidity built over the last few sessions. You have to be cautious, because if this really does want to get heavy, all right, if I can just zoom you out and make you think big picture, we are very likely, if this is a failed breakout, to do something like this and then just come back into this range. All right, this is where all the liquidity is sitting. At this point, it is very hard to know what we're going to do. It's going to depend on how we react to the news the next few days and next week, and how we react to earnings. Now, it can use this liquidity to create a right shoulder. Of course, it can do that, but it can also just be a nice demand point and bounce up. It can also sweep out everyone, take all their stops out, and then do it. So there's a few possibilities here that you need to be aware of. What is going to dictate this is going to be earnings, and it's going to be the news. And like I said on Sunday, Thursday and Friday are the big pieces of news. So here we go. Going into tomorrow, you have to be aware of these, all right? Initial jobless claims, this is a massive number. It is going to help dictate what the Fed might do next. Are they going to make the cuts, or are they going to stay higher for longer? If this comes out and it's not a figure that the Fed like, and we think they might stay higher for longer, you can guarantee we're going to start washing on the market. So very important to look at this. Same with wholesale inventories, not quite as important, but they are figures that are going to be noted, and the same with the home sales. And then Friday, massive. Personal income, PCE, core PCE. And again, pending home sales. So lots of news catalysts the next few days. Now remember, we don't take the news plays. We don't gamble on the news plays. All we do is we understand where the liquidity is, we let the market settle down, and we follow the flow of the market, just like we did today. So hopefully you managed to bank just like me. Here's my final profit on the day. If you want to join my community, you can do it right now. There is $200 off using the code YouTube. I will teach you to trade from an absolute beginner all the way up to advanced, teaching you everything you need to know about the markets. The link is down below. And don't forget that Apex sale is on. You've got 7 more days for the 80% sale, and just 48 hours left if you want to do it and pass in 1 day. So if you want to send it really hard, I don't advise it, but if you want to do that, you can do it right now. Until tomorrow, trade safe. I'll see you then.